So you joined in 2011, Kleiner Perkins. What was the startup culture back then compared to now?
Sorry?
The startup culture.
Oh.
When you joined.
Yeah, I just joined, it was really 2012 because it was like December of 2011. But anyway, I think at that point, there's certainly a lot of excitement around the industry. I mean, you were seeing a lot of companies that were continuing to, drive high valuations. I think it was certainly very easy to raise capital as compared to certain times that I personally saw. I think both then and today, the capital that's required to start companies now is just fundamentally lower than it was 15 years ago, thanks to things like Amazon. And so, you take that into account as well as, which some of you may not know, it used to be the case that most investments by venture capitalists were what's called syndicated, meaning that there's two VCs. Like, I had that with my company. We syndicated Google with Sequoia when KP invested in it, and that was very common. And it was common because oftentimes, like if I had to give up a lot of my ownership of my company, but that was the nature. The power was on the venture side and not the entrepreneur. And I think that dynamic's changed, which is also actually, I think, driven, let's say, this transition to more VCs having an operating background. Right, because if I'm going out and competing, let's say for one of your companies, and there's a lot of demand for you to invest, like, guess what? $5 million from like Kleiner Perkins is equals $5 million from some other firm, right? So we have to differentiate how we are going to give our entrepreneurs an unfair advantage, either through our platform, in terms of like recruiting or BD or the brand, or as well as that individual partner's experience.
So, from an individual partner experience, what's kind of, I know you talked a little bit about your speciality, but could you just go into a little bit more detail about what you personally specialize in and the investment criteria of Kleiner Perkins in general?
So, just so I'm clear, as like an investor, as a board member, or areas that I'm investing in?
Areas that you're investing in.
Okay. So, as I mentioned before, I have a pretty broad aperture just as a function of my background. So, I think I first and foremost really focus on the people. I think when you look at the continuum of investing from venture to growth, on the venture early stage investing, even when you're raising a seed amount or an A, it's all about the people. And you're betting on, does this person or does this team have the intestinal fortitude to actually persevere over the next decade? There's areas I'm more interested in. I'm certainly more biased to companies that, in my mind, are very technically defensible, which means that I'll have that bias means that I might miss some other companies, right, as a result of that. But I think it all comes down to an individual, and one of the things that I kind of try to look for is, why is this person starting this company, like really at a deep level? And I don't think there's a right or wrong answer to that, but for me, I tend to lean in towards people who I feel like are starting a company because they have some type of chip on their shoulder. There's something really deep that they need to prove, to themselves or someone else, because it's that level, I think, of drive that needs you to endure the loneliness, to endure the good and the bad. And it's interesting, you don't really read a lot of blog posts about this because the people who are going through it are not going to take the time to go write this. And so I take that same empathy even as a board member with my companies of saying, like, look, I get what you're doing is like really hard, but like, here's from I'm really careful to not be prescriptive with our companies. Like, or I'll share an experience and I'll point out the pros and cons, and I might even indicate what I might do, but I make it very clear that it's his or her company and it's their decision. And I was very close to Bill Campbell, who unfortunately passed away a couple months ago, and he used to always comment how, more often than not, boards screw up companies. And unfortunately, that's true. And so I'm trying to not do that, not be that person.
Okay, so I guess you could kind of split it into a founder and a company. So when someone is coming to you, and you said one of the things that you're looking for in a founder is really having that motivation, like you say, a chip on their shoulder almost. So if you have to kind of break it down into, let's say, 3 things that you're looking for in a founder, or that you've identified in founders that you really think pushes them to the next level. And from a company point of view, 3 things in a company that you think is pushing them to the next level. How would you kind of split that up?
So we use this term that we like to back missionary founders. And I think missionary founders, do come from this basis of this like very core why, the motivation. It's not economic. They see a problem in the world, whether that be an enterprise or consumer, and they want to go solve that no matter what, and they don't really care if we invest or not, right? And it's like that level of conviction. And of course, they have to be smart and driven and all these other things, but that's one. The second is, do we think that this team or this individual is charismatic enough to recruit? Because when you're building a company, I tell my CEOs, over 50% of your time is recruiting, full stop. And so, that's actually important even on the A to see hey, are they able to pull people in? I think on the company themselves, I'll take a more enterprise-oriented lens to it. Do we have belief that this is a painkiller, not a vitamin? Meaning, if this product exists in the world, will people actually pay for it? Or is this kind of a nice to have? Nice to haves are really hard to sell when the market changes, which it will, right? So and what we don't do, in terms of a kind of an anti-pattern is, while we look at markets, we don't spend a lot of time on, what's the total available market? And the reason, at least I don't do that, and the reason why is so many of these large companies that have emerged over the last decade, if you tried to do that analysis, you probably talk yourself out of actually investing because they created new markets, ones that maybe didn't exist 10 years ago. Again, Airbnb, great example, right? And so I think you have to be really cautious around that. And it's something, at a firm, we think about a lot too, of we all come with these set of experiences, which is great, but that it's also a degree of liability as we make a decision. I think the one kind of a common pattern that I've seen as I've studied even our history of decision making in the last 4 years is, the worst investments are the ones where it's unanimous that every partner thinks we should do it. Why? Because then it's too obvious. But both the best and the worst investments are also contentious, right? So it's okay, that's more difficult to learn from.
I think that was a really valuable lesson. I know for our students here at Draper, they're taught a lot to really think about their market size, and kind of saying to them, think about it, are you really opening up new markets, is a lesson that I'm hoping that you all wrote down and that you're going to take that going into pitch day next week. So the student entrepreneurs that we have here are really sort of at the seed or even pre-seed stage. How important would you say it is to have a team established? Because I know that is something that generally we struggle with here at Draper, having a team already in place. How important is that?
I think at that stage, it's not. I think, I'm just reflecting back when I was doing a fair amount of angel investing. It's, do you have belief that this person could do that? They have a high enough emotional intelligence. Do you, reference checking? I mean, that's actually arguably one of the biggest things that we do on entrepreneurs that a seed investor would do in terms of, people you've worked with, or can people speak to your character to try to get the answer on the why, right? And then I think in terms of other counsel, depending on the area, you might be working on a product or an idea that's going to take a long time to build, and so you may not have all these proof points, right? But I think having, let's say, customers or potential customers that an investor could talk to, so he or she could actually build a conviction around the opportunity, is particularly important.
So maybe some kind of traction or some kind of market validation. Maybe. Some
type of market validation, as well as one of the things I did early on, even when I was an entrepreneur, is can you get some advisors? They're not maybe not employees, but one of the things that really sets this valley apart, which I had no idea was the case until I had this the stint when I lived up in Seattle, and it's this pay it forward kind of approach. And I'll tell you, when I went up to Seattle, that's where it became so clear to me that there's something unique here, because I did not see that. And I know that you guys are visiting for a particular point in time, but as much as you can ask for people to meet and expand your network, I think, the entrepreneurs who understand that, then you can make yourself look bigger through those advisors. And those advisors can also actually give you a lot of street cred to investors.
Being here in the Valley, one of the phrases that I hear all the time is your network is your net worth. So really building up that network is so important. So I guess my next question is going to be more about funding quite specifically. And I don't know, there might be some bias in this question, but would you even recommend going for VC funding at the particular stage that the students might be at? There's so many different options to
Yeah.
funding now. There's crowdfunding.
Yeah, so my views changed over the last 4 years a little bit on this. So initially, when I joined KP, I'm like, we should be doing more seeds. Like, why aren't we doing this? And then about a year, I realized actually, for us, seed investing does not work with the economics of our fund. Okay. Now, about a year or so ago, I launched something with another gentleman named Anjane called KPCB Edge, where we do some seed investments in very specific areas, but the check sizes are no more than 100K, right? We would never lead. Now, the challenge is, I don't think it's a signaling risk. I don't buy that argument because that's kind of saying you're worried that you're going to fail because if you don't fail, there's going to be high demand anyway. So it's a weird optimization question for me. I think the challenge, though, for you is like you only have so much time in the day, and you can spend a lot of time fundraising, right? And so as fast as you can get that done, the better. And certain institutions, it's like could spend a lot of time with you and then not invest. So it's a long-winded answer to your question. It's like I probably wouldn't, frankly. And if you do, I would try to get it from 2 institutional investors versus 1.